All right, let's talk about something most businesses don't think about nearly enough: accounts payable. Yeah, I know, it sounds a little dry, but stick with me. We're going to explore how taking this everyday task and moving it offshore isn't just a small tweak, it's a massive strategic play. So here's a question for you. Is your accounts payable department secretly hurting your business? I mean, it seems so simple, right? You're just paying the bills. But the hidden costs, the little drains on your resources, they add up way more than you'd think. Okay, so let's pull back the curtain on this hidden problem. What really happens when accounts payable isn't running like a well-oiled machine? And this is where it gets really interesting. Think of these common pains as tiny leaks in a boat. A missed discount here, a late fee there. No big deal, right? Wrong. You add it all up, paying for the same invoice twice, the sheer overhead of your staff, vendors getting annoyed, and suddenly your business is taking on water. It's a huge drain on your efficiency and your bottom line. And this slide just lays it all out black and white. You've got the old way, the in-house AP, which can be super time-consuming, full of errors, and just plain expensive. And then you have the offshore model. It's built from the ground up to be fast, accurate, and totally scalable. And the best part, it costs a fraction of the price. All right, so let's get to the good stuff. What are the real tangible benefits you get when you make the switch to an offshore team? Let's break it down. First up, a huge jump in efficiency. I mean, just imagine having a dedicated team whose only job is to process invoices like clockwork. They have streamlined systems for one purpose and one purpose only: to get it done right and get it done fast. Next up, you're going to see way fewer errors. We're talking about things like multi-layer reviews and super structured procedures. This means those costly mistakes, like paying the same bill twice or completely missing an invoice, they get slashed. It brings a level of discipline that's just tough to maintain with an in-house team juggling a million things. And of course, the big one, the cost savings. This is huge. You cut down on the need for more in-house staff, the office space they take up, all the training, the benefits. Suddenly, what was a high, unpredictable overhead cost becomes a stable, predictable operational expense. That's a game changer. And number 4, this is so important, is seamless scalability. Think about your busy season, or maybe a period of huge growth. Instead of that slow, painful process of hiring new people, an offshore team can scale up or down almost instantly. You can meet demand without ever skipping a beat. Okay, I know what you're probably thinking. This sounds great, but how does it actually work? Is it a huge headache? Let's demystify this whole thing, because honestly, it's way more straightforward than you'd imagine. So check it out. It's a really clear 5-step process. It all starts with step 1. Every single invoice that comes in gets processed and validated. Then, in step 2, they match it to a purchase order. Step 3 is where they schedule and coordinate the payments. And this is key. In step 4, the team handles any problems or disputes that pop up. Finally, step 5, everything gets reported and reconciled. You end up with clean, audit-ready books every single time. So here's the most important takeaway. We're not just talking about a simple fix for paying bills here. This is a fundamental, strategic shift for your entire finance department. And this quote just nails it. By offloading all those repetitive, time-sucking AP tasks, you free up your most valuable asset, your internal finance team. Suddenly, they can focus on the stuff that actually grows your business. High-level things like financial planning, forecasting, and strategic analysis. And you know who this is a massive win for? CPA firms. Think about it. You can streamline AP for all your clients, making sure everything is accurate and compliant. But the real prize? Your own experts get more time to focus on the high-value work that really drives your firm's growth: advisory services, audits, and strategic tax planning. Okay, so we've talked strategy, but I'm sure you've got some practical questions. Let's do a quick Q&A and tackle some of the most common concerns head-on. All right, first up, the elephant in the room: security. Is it actually safe to send your sensitive financial data to a team overseas? 100% yes. Any reputable offshore firm is going to be using top-of-the-line security. We're talking encrypted systems, super strict access controls, confidentiality protocols. Your data is locked down tight.
Okay, what about your vendors? Are you going to damage those important relationships by outsourcing this stuff?
No, not at all. And this is a really common misconception. The offshore team is completely invisible to your vendors. They work behind the scenes. Your vendors still talk to your people. The only thing they'll notice is that their payments are suddenly way more reliable and on time. All right, last big question. How long does it take to get started? Is this going to be a 6-month implementation nightmare? Not even close. Most businesses are up and running, fully operational in just 1 to 2 weeks. Seriously, it's an incredibly fast and smooth transition. So, when you put it all together, it's clear that this is about so much more than just saving a bit of money. Moving your accounts payable offshore is a powerful strategic move. It's a way to tighten up your cash flow, unleash the true potential of your internal team, and build a financial operation that's ready to scale. So I'll leave you with this one final question to think about. What incredible things could your team achieve for your business if they weren't just spending all their time paying bills?